What is going on, investors? Hopefully you guys are doing well out there. It's time for our quarterly check-in on Intel Corporation, ticker symbol INTC. Over the last year, stock is down 18% after reporting their earnings after the bell. Stock's down another 4%. It was up about 3.5% during the regular trade. We'll come over and take a look at this from a technical perspective. Quite frankly, this is making a really interesting technical pattern and really is setting up for a Friday or a Monday trade or series of actions. Quite frankly, we'll talk about that more here in a second. But a lot of people know that I haven't been the biggest bull on Intel, and inside the comments I always get things talking about their Alder Lake chip or their foundry or the new CEO or the different kind of things that Intel is doing, or the fact that they have a low multiple or price to earnings, price to sales multiple that far is lower than the rest of the competition. But I just want to show you something. Over the last 5 years, Intel stock is up 29%, but AMD is up 573% during the same time frame. Nvidia is up 658%. Qualcomm is up 175%. TSM is up 187%. Texas Instruments is up 122%. So when we are on the investor channel, it's not the chip review channel. It's the not I care about what chips are cool and which ones are not. It's about stock performance. And quite frankly, Intel has lagged the group. And when we move to these financials, I think you will see why. Revenue in the most recent quarter came in at $18.4 billion. That was good for a year-over-year decline, a decline of 6.6%. They did beat expectations by about $80 million. When we come over here to future revenues on this company, we're talking barely growing over the next couple of quarters. In fact, analysts really aren't projecting growth until you get out to about the 2024 quarter with Intel. We'll see if they'll be able to meet those expectations. They certainly haven't over the last 5 years. In terms of their Q2 guidance, they're expecting revenues to be at about $18 billion. Consensus was closer to about 18.5. Adjusted EPS at 70 cents. Consensus was closer to 73 cents. For the full year, they're expecting about $75 billion worth of revenue. They're expecting brighter days ahead over at Intel because they're expecting to beat expectations by a little bit on that full year revenue growth, which analysts were expected to be closer to $75.6 billion on that earnings side, also coming over consensus. Little bit of a mixed bag when it comes to Intel. The upcoming quarter is a miss. The full year kind of is reinforced over and above where analysts were anticipating. Now, in terms of these numbers, we come over to them. We have this $18.35 billion. Again, that was a decline year over year on a quarterly basis from 19.6 down to this 18.3. We have gross margins also contracting just a little bit over at Intel because take a look at this. Our cost of sales actually increased year over year. So when your net revenues actually decline year over year, and then your cost of those sales actually go up, that is a negative. That's also why this stock has been underperforming the peers, because if you look at the gross margins of an Nvidia, of an AMD, even a Qualcomm, a TSM, basically across the board at these companies, they've actually been increasing those margins, and it just shows me the weakness, quite frankly, of the Intel product. If you can't raise your margins along with the rest of the industry, not only are your margins shrinking, your sales are shrinking as well. That gets us gross margin of $9.2 billion. Again, I want to emphasize that the cost of sales went up when our revenue declined. That is a nasty combination. Now, in terms of R&D expense and marketing and general administrative, well, you spent more on marketing to drive less sales. You went from 1.3 up to 1.7 in the quarter. Same thing with research and development. Lots of fees there. Now, interesting accounting is the fact that they were able to recognize a $1.2 billion benefit on a restructuring charge, whereas last year it cost them 2.2. So operating expenses are going to be skewed a little bit. What I will do is actually strip out this 1.2. You don't have to, but I personally would strip that out. Just like I would strip out this 2.2 in the previous quarter as well. I would actually strip that out and make this quarter look even better than it was. If you take 4.3 and you add it to 1.7, you get to about $6 billion worth of cost, and then you minus it off this 9.2, you get to about $3.2 billion worth of operating income versus the 4.3 that they recognized. That would be a massive decline over where you were a period ago, especially when you benefit them this $2.2 billion that is recognized as cost. All things being considered, absolute freaking disaster over at Intel, shrinking sales, shrinking margins, shrinking profitability. I mean, when is the turnaround happening? Everybody get in that, all the bulls that are watching this video, get in the comments and let me know, when is the turnaround coming? This is like probably our 10th video on Intel, and I keep telling you guys, it's not here. It's not showing up. It's not here yet. You do come over here to the balance sheet. It paints a pretty good story, okay? $38 billion of cash. It's actually way over where they were in December. We know this is not coming from operations. So we come down here to debt and we see the debt is actually down a little bit. Short-term debt is basically the same. So they're not getting this through debt. So I'd have to assume that Intel sold some kind of business in the most recent quarter, or maybe they did an equity raise as well. We'll look at that. I doubt they can with the way the stock has performed, but we'll come down here and we'll see that. The way you find that out is in cash flows. This is why we go statement of operations, essentially profit and loss. We take a pit stop on the balance sheet, and then we answer any unanswered questions down here in cash flows. And it also could give this company a little bit different perspective. We talked about how they have declining revenues, declining operating profits, declining basically everything across the board, minus some accounting irregularities that have shown up due to restructuring. Well, cash flows could paint a little bit different story when you come down here to Intel. You get to report this $8.1 billion worth of net income. It was 3.3 in the previous period. Again, some of that due to the restructuring charges that they had to recognize. You strip out all the different adjustments that you get to make, and you get to net cash provided by operating activities. Actually paints a pretty flat picture over at Intel, which quite frankly where the stock has been for several years. $5.8 billion or nearly $5.9 billion with a positive cash flow. Last year, you're sitting at 5.3. So just marginally better on those cash flows. Now, in terms of the different kind of investments that they've made, they did have a proceed from a divestiture of 6.4 billion or 6.5, excuse me. And then they've got a sale of equity investments coming in at 4.6. So when we saw that this cash balance, it went up a lot. It was at 28 and it went to 38. The vast majority of that, again, is not coming from the results of the company. A lot of that is actually coming from the sales of these investments, which look, if they paid a good price for them and they got a good return on them, certainly good for you, the shareholder. They did pay some dividends in the most recent quarter as well. They did not repurchase any common stock as this company, I think, has put a pause to that as they make some massive investments in that foundry business. The last thing I want to show you is our operating income. Take a look at it shriveling in client computing. It went from 4.2 to 2.8. Again, these are our operating incomes on a year-over-year basis. On a quarterly spread, you went from 4.3 down to 2.8. Data center and AI down from 1.7 to 1.7, basically from a rounding perspective. Network and edge ticked up just a little bit from 243 up to 366. You've got accelerating computer system and graphics. That's still losing money. And in fact, those losses accelerated from 176 to 390. That's a loss. Mobileye decelerated as well from 171 to 148. They're obviously trying to spin out a portion of that business. The fact that it only generates $148 million worth of operating income in a quarter, I'm not exactly sure the multiple or the type of valuation that they'll get on that business, but they might be able to get it. And Intel Foundry Services, which is a bull case argument that a lot of people make that this company will go into. And I'm not going to argue that the foundry service is a good pivot. And if they're able to pull it off, certainly could be a good thing, but that is also losing money as well. Again, that's essentially a startup service for them. They're transitioning into them. They're also going to rely on that CHIPS Act, which made its way through the Senate. And I believe it's making its way through the Congress. They've only got probably a couple more months to pass that bill because we've obviously got elections coming in November. And if you have the anticipated change of leadership in either the House or the Senate or potentially both, well, that is going to spell probably bad news for anything getting passed for the subsequent 2 years of the Biden administration. We'll see if the two sides could work together, if that's exactly what happens in November. Moving on to the technicals over at Intel, we are locked in an uptrend. I've got this blue line here. It kind of reminds me of Netflix, okay? That stock is pulled back, but if you stretch it out to like a 5-year chart and you put an upward trend, it's just interesting. I wouldn't put a lot of weight into this kind of blue line uptrend, but it's there. And at the same time, we're converging at this green line that I have in here, which is not like drawn in here perfectly. It's probably more of a box or a range here between about $40 and call it $45 per share. But whenever Intel has pulled in to that kind of $40 range on the stock price, really since 2017, so we're looking at nearly 5 years, anytime Intel is pulled into that $40 range, well, buyers have shown up. And sometimes they've spiked this stock over $60 per share. And we're seeing the convergence, in my opinion, of two trend lines with Intel. So I've absolutely just baked and roasted this company from a financial perspective. The fact that their margins are shrinking, their revenues are shrinking, they're trying to pivot into a business model where they need government assistance. It's going to take years, if not maybe a decade, to really kind of scale that business up. And who knows what the business is going to look like when you get to that point in time. All that being considered, the stock is actually, from a technical perspective, looking okay. Now, you have to factor in, we're in a massive downtrend, okay, since kind of the May time period from a year ago. So the stock has basically been trending down for a year. It is in this downward channel. I do not like to step in and buy stocks when they are in this downward channel. I personally would wait to see if Intel gets some level of support here. You can easily play the breakout out of this channel, and then you can play kind of the upside back into the $50, $60 range. The reason why I'm talking about with a trade with Intel is this stock reminds me a lot of Boeing. Yes, you could look at the valuation. You could look at kind of the dividend yield as well, which stands at about 3%. A lot of arguments to made that this is a value stock, from price to earnings, price to sales, all those types of things. You could make kind of the longer term fundamental arguments as well with Intel, but it just simply reminds me a lot of a stock like Boeing, where there's a lot of arguments that you can make. There's a lot of positives to the stock as well, but quite frankly, the best way to probably make money in a stock like this, again, that's just up 29% over the last 5 years. You've certainly had some pops and drops along the way. Me personally, I think I'd rather trade this one. If I buy it at a lower price and I can sell it for a higher price from a technical pattern perspective, I think I'd rather get my profits from Intel there and look at these other companies that I mentioned for that share price appreciation. That was Intel. I'm sure I'll hear from the bull case argument down below. Look forward to reading it. We'll see you again soon. Good luck with your investments.